Evening to all of you. Thanks for joining for the session with Navneet. And a lot of us had various things in terms of how will be this budget will be very different from what we saw in 2019, which was also on account budget. So if you were to see in terms of markets have obviously given thumbs up to it. But let's also understand that if there was something worth deciphering which we have missed on, are there in between lines? How does we it looks in global parlance, given that there is also elections in US around the corner, and as many as 70 countries will be going in for elections this year. So on the overall piece, how does it look? So before I start, let me introduce a panelist for you. We have Gaurav Asti. Gaurav, you can just raise your hand. Sure. So Gaurav will be moderating the session today. Gaurav heads up products, used to head our products, and now he's heading our UHNI family office business. He's from IIM Lucknow, and he has over 2 decades of experience. Then we have Navneet Munot. Obviously, if I were to describe Navneet more, it would be showing light to sun. So Navneet has been one of the brightest minds in the Indian AMC industry. I think now it's 3 decades, Navneet, for you, and he also held the position of chairperson of CFA Society, and he's heading one of the biggest AMCs for us now. So, Gaurav, over to you to help us decipher in terms of how do people look at from here, how do people take the advantage of the scenario, which sectors, which overall themes look good. So, Gaurav, over to you for the moderation.
Yeah, thank you so much, Manish, and a very warm welcome to you, Navneet, and
Sure.
everybody who has joined us on this webinar. So, Navneet, this was probably the shortest budget speech that we have seen over a long time. It was just 56 minutes. So, before, if you didn't spend enough time on the television, it would have been over and out before you could figure it out. So, from your perspective, what were really the key takeaways from the budget?
Thank you, Manish, and thank you, Gaurav. You rightly mentioned that this was one of the shortest budget speech. In fact, I mean, because this is just vote on account, it was an interim budget, not the full-fledged budget. Full-fledged budget we will get in the month of July or so. But the finance minister used this an opportunity not only to complete the procedural aspect of taking approval for the revenues and expenditure over the next few months around election and maybe a few weeks after the election, but also outline the overall economic agenda, the reforms, the achievements over the last 10 years, and a vision for the next 25 years, which I think we call India's Amrit Kal. So this is the second year of India's Amrit Kal. We must keep in mind the backdrop in which this budget has been presented. So, Gaurav, I mean, if you look at the world is dealing with several geopolitical challenges, be it in Europe and Middle East, and various parts. We don't know how the whole China-Taiwan situation plays out. The world is dealing with many economic challenges. The year has begun on a volatile note for global markets as well as the global economy. I think some critical US data will be out in few minutes, and we have to see the impact. We saw the US Federal Reserve meeting and how the markets have been volatile and various challenges. And in that, I think India clearly looks like an oasis of hope for the world. We were one of the fastest growing economy last year. We touched, I think we came into the top 5 economies in the world. We touched the fourth largest, in terms of market cap, it touched the fourth largest market in the world. We became the most populous country in the world. In terms of FPI flows, last year was one of the highest. And of course, the whole SIP story is known to everyone. On the bond market side, got included into JP Morgan. The G20 was highly successful. The world looked at India's leadership. The Chandrayaan, FX reserves back to $600 billion plus, services exports rising, remittances. I can kind of like, and of course, the 100 plus medals in Asian Games. I can go on. And that's the backdrop. So while India's macroeconomic conditions, the financial stability, the balance sheet of corporate sector, household sector, banking sector looks very different than the rest of the world. But we have to keep in mind that we are in a world which is like quite fragile and vulnerable to many shocks. And in that, the biggest imperative for the finance minister would be to ensure that we don't do anything which can destabilize or which can impact our overall macroeconomic stability. In 2013, we remember how we had the twin deficit challenge on the fiscal side as well as on the current account side, how it impacted inflation. RBI had to increase interest rate, our currency depreciated quite a bit, and so on and so forth. And from there on, over the last 10 years, I think we have worked very hard to repair the balance sheet, to put India on a high growth path, and all the other achievements that I just kind of like gave a glimpse of 2023. And therefore, the biggest imperative, as I said, is to ensure that macroeconomic stability. And for that, the importance, I would say, uh, aspect of the budget would be on the fiscal consolidation. And that's where the finance minister gets full marks, despite being an election year. And we have seen that, Manish and Gaurav, even in 2019, in the election year, government did not budge from the fiscal deficit target, did not do any populist spending, which could have got some gains in the short run, but could have impacted our fiscal picture in the long run. So delivering a deficit which is lower than what was budgeted this year, just getting into the election, and then projecting 5.1% against the 5.8 revised estimate this year. I think that's the most commendable part of the budget. And again, reiterating that we would be at 4.5% in a year's time by 25, 26. I think that really stand out to me. The other thing that stood out, didn't see that much today in all the commentaries on the budget, is talking about that innovation fund of 1 lakh crore. I think we have been doing very well as an economy, but over the next several years, given all the technological changes in the world, the way AI is changing the world, and I've written extensively on that. It's very important that we become a knowledge-based economy, and for that, government leading from the front, and then taking help of the private sector, of the academia, that 1 lakh crore fund. I think to me that stands out really. I thought of an acronym yesterday, that if I look at this budget, what are the words that come to my mind? And I thought of one word like Vikas, which is actually an acronym for V stands for visionary. I think the vision that we want to be a developed country. World may have many challenges, but we are looking for India to become a developed country by 2047. I think that was coming out very clearly in terms of conviction during the budget speech. The second VIKS, so I stands for infrastructure, and I think 11,000 allocation. And we have seen how in last couple of years, government has been leading from the front as far as infrastructure build-up is concerned. Private sector has taken time, but now that balance sheets are clean, the financial sector is ready to lend as capacity utilization increases. And next year, we are all hoping for a big bump in the private capex. But till such time, government has been doing the heavy lifting. So infrastructure spend, and in fact, I've mentioned that at other forums that one Oscar was given to RRR, the another should be given to India's infrastructure RRR, which is roads, railways, and renewables. But many other sectors are also getting allocation. So VIK stands for knowledge economy, which I've already talked about, the 1 lakh crore fund. I think I'm pretty excited about that. Let's see how the contours of that, but I think that's very important. Leveraging the power of India's talent and the technology, I think both put together over the next several years, India has a lot to offer to the world on becoming a knowledge economy side. The A stands for agriculture and rural. A large part of our population remains dependent on that, or lives in that area. And I think all the efforts made for ease of living for them, for enhancing their incomes or supporting them, will go a long way in ensuring that growth is more inclusive. And then talking about the inclusive, the S stands for the social security net. So in last 10 years, we have seen, Manish, I mean, and Gaurav, right from whether it was the sanitation, whether it was Ujjwala with LPG, whether it's the bank accounts, and then the financial inclusion, Jan Dhan Yojana, Ayushman Bharat. I think providing electricity, a basic LED bulb, a basic the tap water, so on and so forth. I think that is very, very critical given the demographics that we have. So I think those are the aspects that really makes us feel very positive about the growth outlook of India going forward. And I'm sure, I think the equity market investors should take it positively if you are a long-term investor. In the near term, there are many other factors that will impact the market. We can discuss more on that. But if you are a long-term investor, I think you must feel more positive after the budget speech. And as far as bond market is concerned, some of the people, my friends, have said that this was the budget for the bond market more because of the fiscal consolidation. And now, of course, people are talking about the rating agency should look at this very, very positively, and with positive implications both on the currency as well as on the bond yield, because a lower fiscal deficit will give space to RBI to ease the monetary policy. As we all know, liquidity has been extremely tight in the banking system, and we also had to increase rates in line with the rest of the world as inflation went up, and to anchor the inflationary expectations. But if government focuses on supply augmentation, and if government continues on the path of fiscal consolidation, then RBI gets space to look at monetary easing going forward. So from that perspective, surely good for the bond market, and we have seen good amount of rally, particularly in the long bonds over the last couple of days. Very, very decent rally has happened, and the duration funds have clearly benefited from that. But even for the equity market, while in near term there are many other factors that impact, but the long term investors should take this very, very positively. So maybe I take a pause, and happy to elaborate more on any of the other aspect, or maybe some of the things that I mentioned, Gaurav.
Yeah, Navneet, thank you so much for such a detailed response. Uh, you know, HDFC AMC was one of the first to really start picking out the themes of the PSU stocks and infrastructure stocks and all that. And that has obviously worked wonderfully well in your portfolios over the last 2 3 years. Do you think with this budget and the context of this budget, these themes continue to be strong despite the fact that there has been a strong run up that has really happened over the last few years?
Thanks, Gaurav. But while you mentioned that last 2 3 years of performance, but coincidence that we are doing a call today evening, and I'm just coming from another webinar with our investors where we are celebrating 30 years of HDFC Balance Advantage Fund. 30 years of HDFC Balance Advantage Fund, and at 10,000 rupee per month SIP has become almost 13 crores or so, and a 1 lakh rupee investment in at the time of inception has become like 1.5 crores or so. So it's been a 30 years of the wealth creation for investors. But specifically about the investment cycle, so our belief has been that in India's economy, both investment and consumption are important pillars, and of course exports, but that's a smaller part of the overall economy. Investment is very, very critical. The stage of the economy that we are in, we need to invest in infrastructure, private capex. We have been saying for last couple of years that it's time that private capex also starts picking up. Economy cannot continue to be driven only by the consumption. Corporate balance sheets, as I mentioned earlier, have got cleaned up. The debt to equity for corporate India is at a multi-year low. Banks' balance sheets are in a great shape, so they are ready to lend. And capex happens when you have the need to invest and the capacity to invest. The capacity to invest is your debt equity ratio, which is low. I mean, you have cash flows, and then the ability to borrow money and ability to invest. And second is the need to invest, which is like when your capacity utilization goes up. So as across industries, as economy continues to grow at this pace, we believe more and more industries will do that. But meanwhile, the heavy lifting has been done by the central government, and of course all the state governments on the CAPEX side. I think our allocation used to be around, if I remember, in 2019 would have been in like 3 lakh handle, and today we are talking about like 11 lakh crores of spend on roads, railways, renewables, airports. I mean, all kinds of urban infrastructure, all kinds of infrastructure. So that made us like bullish on the entire investment part of the portfolio. So capital goods, engineering, construction, real estate, uh, and then of course many of the public sectors are in the core sectors of the economy. The whole move towards the Atmanirbhar Bharat or schemes like PLI, etc., augur very well for manufacturing. So yes, our portfolios have benefited from that call.
Yeah. So moving ahead, the second part of the question is moving ahead, despite the run up and obviously valuations have also run up. The positivity and the theme remains, or are you now becoming slightly cautious in light of valuations there?
No, I think that domestic cyclicals continue to. I think our fund managers, our investment team, I think continue to remain positive, by and large on domestic cyclicals, the sectors that I talked about, simply because, as I said, that the global situation is still, I would say, there are hazy clouds, and you have more faith on domestic growth, and within that, particularly the revival of the investment cycle. And these are like long cycles. This is not about like 1 year or 2 year, and we have a really long way to go.
Sure. So
The
this is a
valuations
question.
may have
Yeah.
gone up in certain pockets, right? I mean, there could be certain stocks which have gone up, but there you have to see the possibility of earnings growth for a longer period, and the others where valuations are still leaving some space. Yeah.
Yeah. So, you mentioned about the fact when this government came, you were a part of the Fragile Five in 2013, and we have come a long way. I also talk to a lot of clients, and I tell them that if you just imagine yourself 3 years ago, and if I had told you that you would be facing a COVID where you will be locked for 6 months, and you will be facing the first war in Europe in 90 years, and you will be facing, a fresh disturbance in Middle East in 30 years, and if you knew beforehand this is what is going to happen, what is your view on
Yeah.
Nifty? And if you remember pre-COVID, we were sitting at about 12,000, and most people would have
Yeah.
answered 10,000. We are right, actually, despite all of this, we are
Yeah.
studying. We are today sitting at 22, 21,800
Yeah.
today. So, what is it that really held us through? What's changed? Why, despite of the fact that there has been so much global turmoil and things that we have not ever imagined that we'll see in our lives, the market has really doubled.
Many things, Gaurav, that as I mentioned earlier, I mean, if I put a picture of the world last year, a world which is geopolitically realigning, and you have like many of the nuclear powers which are in a hot war, and the cold war between West and China, or between rest of the world and China, continues. If and the whole world needs India as a balancing power, as an emerging large democracy, and a democracy which is likely to become bigger and bigger soft power in the world. World is like demographically diverging, and China has already peaked. The population has started declining. So is the case with Europe, Japan, many other countries. And I think India has the best of demographics ahead of us over the next 20, 30 years. The world is to deleverage. I think the amount of public debt and the amount of balance sheets that central banks have been running, they will have like very limited amount of stimulus to provide, versus India, where the debt to GDP overall is lower than where it was in 2008. It's increased substantially everywhere else in the world. So our balance sheet is in a better shape as an overall economy. The world has to decarbonize a lot over the next several years, and I think India again stands out with focus on a sustainable growth, and we are the world leader in terms of what we are doing on in the energy transition and transportation, and in the few other things. The world is deglobalizing, and there again, if the world is moving from a more I would say the most optimized supply chain to a most reliable supply chain, I think with all the policies in India, and also the infrastructure improves, and the cost of logistics, cost of power goes down, the PLI and the other policies support the lower corporate tax rate. And the corporate India has also become lean and mean and have been innovating. And there's a lot of potential for India on that side in a deglobalizing world where we can become a reliable and trustworthy factory of the world, a reliable and trustworthy farm of the world, a reliable and trustworthy front office of the world, given our demographics and the talent that we have. We produce more engineers than US and China put together every year. So there's a lot of potential on that side as well. So I think when we look at the world and we look at India, clearly India stands out. And I mean, the other large emerging market, China, we know last year, whether the policy uncertainty, whether the property bubble, whether the debt problems and variety of other challenges that they had, versus I think the policy prudence that India has shown, the agile execution that we have shown, and the effective communication that people get from India's policymakers. So I keep saying this, Gaurav, that if you look at Indian markets, our bond market, our currency market, and our equity markets are far less volatile than the rest of the world, even compared to developed world. And what's the reason for that? The reason for that is that we have policy prudence, we have agile execution, and we have effective communication. And not many countries can claim that.
Sure. So, you know, I as I meet across clients, there is this common question that I keep on getting and I keep on answering. I will throw this to you. People are scared of every thousand. You know, every time we hit a new thousand, whether it is 17, 18, 19, 20, 21, 22, people are scared.
Yeah.
And the first, by default reaction is that, now we have hit 22,000. Is the market going to crash? Should we deploy? So, what is your sense? What do you tell your clients? What do you think is the correct approach?
So, and there's a famous quote, if I remember correctly, it was by Peter Lynch in one of the books, that more money has been lost in waiting for correction than in the correction. The people worry about how much money I lose if a correction happens, but more money has been lost in waiting for correction than in the correction. I talked about, let's say, the journey of HDFC balance advantage over the last 30 years or so. And think about it. In this 30 years, when I talked about 10,000 rupee per month becoming 12, 13 crores or so, but there would have been many severe corrections. Even if you look at a long bull market like 2003 to 2008, where we saw Sensex going up from 3,000 to 21,000 at the peak in that period, so around 7x. But if I remember correctly, there were like almost 8 or 9 corrections of more than 10%, 8 or 9 corrections of more than 10%. And some of them were even more severe in 2004 than in 2006, and then the big one in 2008. But I mean, the investors who remained disciplined made money. I would say that this is not a market where you try to time it. I think if you're like excessively worried, maybe you can just spread it over some time, but just focus on the asset allocation rather than trying to time it. Maybe leave that to you and Manish and team to kind of do the overall I would say allocation, and then go with it rather than trying to time it. Yeah. It's not easy. And I know you are absolutely right. I also meet a lot of investors who kind of like have been trying that, how do I, maybe thoda correction aa jaye uske baad lagate hain, but aisa hota nahi hai real life mein. It's easier said than done.
No, see, so the other thing, Navneet, I wanted to ask is that, over the last 10 years, one consistent theme that the government has been doing is focused on infrastructure. Now, obviously, while we all like to travel on better roads and have better connectivity, but can you help people understand that how does this connect to corporate earnings? How does this connect to the economy, apart from the fact that, you are spending more, but how does the multiplier effect really play out?
No, this is a great question. And when you think about, we keep talking of this word about Amrit Kal and the Viksit Bharat and a developed country by 2047 and all that. I mean, what are some of the signs of that developed Bharat or a developed country? And one of the important thing is the infrastructure. And I put infrastructure in like 3 buckets: physical infrastructure, digital infrastructure, and social infrastructure. Of course, one can talk about like lots of other institutions, but I think India's institutions are a lot of the institutions, the central bank that we have, the capital market regulator that we have, the judiciary that we have, and many other institutions are absolutely world class, the best in the world. But or let's say the whole executive and the whole legislature and everything. But talking about the infrastructure, if you look at the digital infrastructure, we are absolutely the best in class in the world. I mean, maybe China and one or two Asian countries who have also done this, what we have done on digitalization of finance. But looking at what we have been doing on UPI, what we have the potential to do on a India stack, and then after that, I've written about in my annual letter, Person of the Year, about very positive on the potential of the health stack. What we have done on the digital side in digital finance, I think we can see something similar on the healthcare side as well, and followed by education. So the digital and social. So digital, we have become world class, but it can help us building high quality social infrastructure also, healthcare, education, skill development, and so forth. On the physical side, historically, we were like substantially behind. Whatever we were building for the yesterday. Now, when you look at like whether an Atal Setu or when you travel by the Vande Bharat, when you look at like the newer airports and all of that, I think you feel like being in a developed country. I mean, you travel to US and you can see the difference between us and the US. We, I think, are better on several of them, but we have a long way to go. We still have to build so much over the next 20, 30, 40 years, and then we are really moving towards the new infrastructure that we are building is clearly, again, I think the first world physical infrastructure. And this connectivity makes a lot of difference. If you see the growth between 2003 and 8, which was very high, a lot of that growth happened because in the previous 4 or 5 years, we did quite a bit of work on power, on telecom, on electricity, some of those things, because it has a multiplier effect. Once you build the infrastructure, people get connected. So if, let's say, this whole new Mumbai and whatever place where it ends, the Atal Setu, think about it. When the travel time has come down, a whole new townships will start getting built. And when the airport comes, and think about the whole ecosystem that kind of fall in place, so on and so forth. I can go on, but even for rural India, which is like half the in terms of per capita GDP is half of the urban per capita GDP. I think as you connect them with the road connectivity, with railway connectivity, with digital connectivity, with banking connectivity, so on and so forth, then you can kind of like get them out of that their inability to grow and deliver. You can get them out of that. So infrastructure plays a very, very big role, Manish, and that's a very, I would say, important point that you raised.
So I have a question here, Navneet, from the audience, which are saying that in context of this vote of account, uh, what are the sectors that you think will be positively impacted?
So as I said that we are, I mean, if you look at our portfolios, we are more positive on the domestic cyclicals, which is your industrials, financials, a lot of things related to infrastructure, and what else? Yeah, these are like mostly, even in the consumer discretionary and the consumption basket, there would be certain, I would say, pockets where we feel positive. I would say that at our end, I think HDFC AMC, our focus has always been a lot more on stock selection rather than on the top down the sector allocation. So sector allocation, of course, we have certain macro views and they will reflect, but the sector allocation are more a reflection of what we like on a bottom up basis. It's a derivative of what we like on a bottom up basis, the stock. And so if you are liking, let's say, a certain set of stocks, and they may happen to be in a certain sector like that, rather than just first deciding on the sector and then choosing the stock. Also, I would say that one always has to keep the valuations in mind as well, right? So there are like sectors which again will still have a long-term positive outlook, but still maybe some of that is already built in the valuation. Then you're only looking at the earnings growth, and in some cases maybe even for next several years, if that has already got discounted, then even if you like a sector on a top-down basis, but a large part of the gains have already been kind of like behind you. So valuations play a very, very critical role.
Sure. And in terms of your house view, has anything changed post the budget, or everything just remains the same?
No, I think the overall belief has got reinforced. I think we remain positive on the overall outlook of the economy. We remain positive on the overall outlook of like various segments, particularly the investment cycle that we have been betting on. Over the last few quarters, we keep hearing from people that uh, the urban consumption has been growing better than rural consumption. Premium consumption is growing better than the mass market, or the formalized sector is doing better than the informal, or the smaller companies. I mean, the SMEs relatively. I think at the margin, with let's say elections coming up, and the overall spending goes up, and the percolating down impact of all the infrastructure spend and the other spend that has happened, at the margin, there's a possibility that you start seeing improvement on that count as well, yeah, on the consumption side.
Sure. So I've got some questions on the value picks, but we will not really be able to discuss anything
Stock,
stock
I won't be
specific.
able to talk.
Yeah. In this, so maybe I'll come to the bond market. And we have been talking. We've been hearing a lot that as we move towards the developed markets, interest rates will keep on further going down. So do you think that journey has really started, that interest rates for India are structurally going to be lower than maybe what we had seen a decade earlier?
On the bond market side?
Yeah.
I think so. Historically, I think the bond market has been like a local market for local institutions. Retail participation has been very limited, but through mutual funds and now a little bit more. But foreign investors have played a very small role. Now we're getting into the JP Morgan bond index, and over a period of time, likely that we get into the Barclays, Bloomberg, and the other indices as well. We will see more participation by the global investors also. And I think the kind of work that we have done on macro stability, on the overall macroeconomic stability and financial stability, over a period of time, India has an aspiration for a better rating and greater participation of the global investors. Now, of course, maybe at some point in time when their participation becomes very large, then maybe the volatility goes up, because then you have one new set of players where the domestic regulators have I would say, a limited amount of let's say a direction. But having said that, still there is a pool of savings that we can attract in the bond market also. And over a period of time, if the investment cycle continues, I think over the next several years, if the investment part of the economy does well, there should be more issuances from the corporate side also, and we see more activity in the credit market as well. Over the last several months, in fact, we have done, our fixed income team done a couple of webinars and couple of calls. What was, I think, very interestingly titled, "The Time to Invest is Now," or something like that. And we have clearly seen the long-term yields falling, and investors have benefited.
Sure. So I have a very interesting question, not directly related to the market, but I'll still push it to you. So do you see any connection between economic development and the cultural development of a nation?
Do you see a connection?
Hmm.
That's a very interesting question. And I mean, if you look at the history of the world, or let's say, I'm not going back a long history, but if you see the growth trajectory of the world in last 100 odd years, so let's say Japan was decimated in 1945, as you know, completely decimated after the Hiroshima and Nagasaki, the atom bomb, etc. and all. And over the next couple of decades, the way they rebuilt and became the second, third largest economy in the world. You look at the growth of some of the other East Asian tigers, you see the growth of, let's say, the China and all that. There has to be a determination in the country. There has to be a big self-belief in the people. I mean, while marketing India over the last 10 years or so, I would be saying there are 4D that make me positive on India: democracy, demographics, demand, and digitalization. That there are not many places in the world where you find all these four. And in last 2-3 years, I've added a fifth D. There's a determination. The determination of 1.35 billion people that this time is ours, taking pride in our civilizational heritage, taking pride in our ancient wisdom, and that confidence. And particularly, Gaurav, I don't know which place you come from. I come from a small town in Rajasthan. I grew up in Pyawar. A lot of people on the call may not have heard this place. I meet kids these days from small parts of UP, from Bihar, from Jharkhand, from Northeast, from Karnataka or somewhere. You have to see the confidence in their eyes, and particularly the girls, the younger girls from smaller places, and the confidence that they have. This, I think, is part of the cultural renaissance, whatever you say, and maybe 22nd January in some manner played a role in that. There, we have a belief in ourselves. We are coming out of that, maybe 1,000 years of rule by foreigners, by various powers in the world. We are finally kind of coming out of that and taking pride in being an Indian, taking pride in our long civilization. In our life, I don't know, Manish, Gaurav, you can add, we haven't seen that what we are seeing in last few years, which I think helps in economy, because that self-belief and not copying everything that West has. I had a great honor and a privilege of chairing ESG committee. And, when I used to travel, and even now people say, Are, India mein aapke ESG nahi hai. I mean, in Europe, we have been at front end. I said for 5,000 years. I mean, Vasudhaiva Kutumbakam, Bahujan Hitaya, Bahujan Sukhaya, Parasparo Brahmo Jivana. We taught the world what is circular economy. We know what governance is. We have taught the world. So, I mean, in environment or social or governance, I think we taught the world. We don't have to learn from others. In fact, we should be teaching others and shouldn't have this like kind of a sense of shame or sense of, like inferiority complex that we had. I'm seeing that changing. So a little longer answer, but I agree with whosoever has asked that, yeah, there is linkage between those two. As long as it doesn't become like you only focus on that and forget the economic development, because as you go back in India's history, we have been very scientific, right? I mean, we are the ones who invented zero. We are the ones kind of like who had so much of knowledge of astronomy, whether it's Ayurveda, whether it's every sphere of science. We were like Takshashila and Nalanda, and you go back in history. I think nobody really knows who wrote Vedas or who wrote like maybe several of the scriptures, and see the knowledge which is there. So we believe in science. That we should not leave, I think, because our spirituality and science has been like very, very intertwined. I feel very positive. I think next 100 years, India will be the world power, because science and spirituality का जो combination हमारे यहाँ पे है ना, वो बहुत कम societies in the world है.
Thanks, Navneet. Very
I
interesting.
like when somebody asks these kind of questions, because they are very important and investors miss out on some of those aspects.
So, in cricket parlance, and I know you are a big bull on India, so it's our match to lose. Everything is going for us. But
आपने बहुत
what
सही
can
लाइन
we
बोली कि लोग बाग जब मेरे से रिस्क पूछते हैं ना, तो मैं बोलता हूँ कि रिस्क एक तो वर्ल्ड बहुत फ्रेजाइल प्लेस है, राइट? आई मीन जियो पॉलिटिक्स में एनीथिंग कैन हैपन एनी डे. द वर्ल्ड इज रियली hyper divided, and we have never seen like post the end of Cold World War in 1980, 30-40 years we lived in one of the most peaceful era in human history. Our generation was like very, very lucky. But last 3-4 years, I've been writing or speaking that I'm getting a little worried on the global geopolitics. Anything can happen. And even the macro cycles are getting shorter and shorter. Markets make the gamification of markets, I think globally and even here, makes me a little nervous. But वो सबको हटा के इंडिया के लिए रिस्क है. मेरे को रिस्क लगता है if we get complacent. Like अगर एक मैच जीता हो, अगर हमने हार दिया तो हमारी गलती है फिर.
Absolutely. So, Manish, is there anything else, questions that you have? I think we are running out of
Two
time.
particular questions. One is slightly different kind of perspective. So if you were to zoom out and if you were to see two scenarios of Indian markets, one is particularly when we had seen 2003 to 2006-7, where we had seen euphoric rain, and the second is 2014, where basically markets moved up and then consolidated. What according to you with the experience of 3 decades, which phase are we in? Can we have any similarity with these ones? Are we sitting on 2003 kind of phase where we are undervalued, but we are not able to imagine because we have not seen this kind of valuation? Or are we sitting on 2014 where there's euphoria coming in because of domestic flows, and then it will consolidate in some time? What's your view?
So there are some similarities and some dissimilarities between 3 to 8, right? 1999 to 2003, 10-year bond yield fell from 11% to 5%. So we benefited from that. The bank's balance sheet had got clean by 2003-4. We took a lot of pain ahead of that. So from that way, I think there is some similarity on the balance sheet side. Corporate sector had gone through a tough time in the late 90s and the early 2000s. So we can clearly see that in the corporate balance sheet. But rates are on the higher side relative to that. And even the global inflation and global interest rates, that environment is little different. 2003 to 8, the world grew at a much higher rate than the pace at which the world is likely to grow. That also helped India. We can say that we are a domestic consumption, domestic investment story, but still exports as a percentage of manufacturing output is very high. Services exports are becoming meaningful for the economy and also for the job creation perspective. So if world is growing at a much slower rate, that also impacts us. And the valuations were a lot cheaper. In 2003, April 2003, I remember Sensex was around 3,000. We were at 10 times. Today we are at 20 times. So those are some of the differences. So the starting now from here on over the next couple of years, so जब भी मेरे से कोई मार्केट पूछता है ना तो मैं चार चीज देखता हूँ. Number one is the macro. I think macro overall, India's macro look pretty robust. I think the worry is on the global side, but Indian macro look on the good side. Second is the trajectory of corporate profitability. So corporate profits as percentage of GDP are at 4.5%. They peaked at around 7.5% in 2008. Then they fell to like 2% and below post-COVID. They are at 4.5%. So if nominal GDP grow at 10, 11, 12%, corporate profits can grow at a slightly higher rate. We still have some more scope there. The third is the valuation. So valuations may large cap at 20 times 1 year forward, maybe 2 year forward लोगे तो 17, 18 times होता है. Are they like excessively rich? Not necessarily, but yeah, mid and small caps में there are pockets where there is some tough fraud, and you need to keep that in mind. Overall, by and large, as a stock selector, you can still get your picks. Last but not the least is liquidity and sentiment. So macro, corporate profits, valuation, and liquidity sentiment. ये मेरा framework है, चार चीज. When somebody asks बाजार क्या लगता है. So on the liquidity and sentiments, I think the domestic flows will continue to increase. I mean, you guys know the power of the SIP and how it's increasing. From a global investor's perspective, last 3 years they haven't invested much, but India's weight has been going up. Last year, 2023 was very good. January, last few days, I think few weeks, we have seen some bit of selling. Depends on many global factors. But if you ask me next 5-7 years, I expect more money from foreign investors than less money. In the near term, 24 में एक चीज I think we have to keep in mind is that in case China surprises positively, which is like not a very high likelihood, less likelihood. In that case, there's a possibility maybe some bit of money also is attracted by China because the market is very cheap there, very, very cheap on a relative basis. But a lot of long-term structural investors are kind of like trying to move out of that place. So at higher valuation, maybe they book profit. But I think that's one factor that in 2024 we need to keep in mind. So by and large, whether in 2003 to 8, from earnings growth perspective, yes. From growth perspective, yes. From investment cycle perspective, yes. But starting valuations are not that cheap. So the return expectation should not be 3,000 से 21,000 ऐसा 5 साल में हो जाएगा, नहीं होएगा. मतलब बहुत unlikely है.
Thanks, Navneet. The next question is slightly more. So we are all fairly looking at the world economy at 106 trillion, where India has started moving between 3.6, 3.7 trillion. And the way the things are projected with 7% or 6.5%, so there are various views, but we should be reaching there sooner than what we are thinking of. But having said that, what are the dampeners, given that there are two war kind of scenario which is happening? So what is happening with these wars is the defense budgets have gone up. So like if you were to say in India, we have seen 11% increase in budgets of defense, and US and versus Russia are naming the best, in fact, beneficiary of these, because whenever there's any kind of, so they are the biggest suppliers, 40%, 11% of the world ammunition. So like this, what are the kind of dampeners which you can see, if at all, which people have to be cautious of, which can derail this growth process or delay it?
So I think the one thing we need to keep in mind that we are in a highly uncertain world. One is the uncertainty, and second is that every cycle is becoming shorter and shorter. Macro cycles आप देखोगे, if you see in 23, the year for US began with expectation of maybe a soft landing. In March, when a couple of banks failed, it was like hard landing. In few months' time, it again took like soft landing. Then was like no landing. Everything is just fine. And maybe again the beginning of the year, Fed has again changed the expectation. So the macro cycles and the market cycles are also kind of like getting shorter and shorter. So you don't know, I think, dampener where it came from. Also, last couple of years, the one thing it has taught us, all the market participants, is that risk come from sources where it's least expected from. Like 20 May, I think Gaurav was saying earlier, who would have thought that we'll have COVID in the month of February when market was Nifty was at an all-time high of 12,000. In 1 month time, it was like down 30% in COVID. In 21, it was like second wave, which was unexpected. In 22, it was Russia-Ukraine war. In 23, it was high rates and etc. So every year we don't know. I think this year again, where the surprise, both positive surprise भी आ सकता है. कहीं से we don't know.
Yeah, Navneet,
China is a large economy of the world and a large political power of the world. They have imperial ambitions, and I think China, Taiwan, or maybe even on the economy and markets, what they do will have to be kept in mind. But structurally, I think we have to. I think the investors need to take a longer term call and stay positive on India. I think we are the ICICI biggest game in town.
So, Navneet, last question from our side. So, given that we are no more decoupled economy, right? There are almost 6 dozen countries which will going for elections. Assuming that things will happen in the normal scenario in India, but what if things changes in US? Because I think there will be change of guard. How it will positively or not positively impact us, if at all?
So I tell you something interesting. You remember what happened on 8th November 2016?
Yeah, most of people remember.
What is that?
So basically, that is where people always thought that the guards are changing and things will be different.
No, so 8 November 2016, of course, the Indians remember for the demonetization, but there was also the election of Donald Trump. And if you remember, the market fell in the first few hours quite a bit. I think a couple of hundred points on Dow Jones, and I don't remember how much on S&P. But then next couple of years, it was a very, very different story. And in the run up to the election, every day, if Trump is becoming more popular, market will go down. If Trump is becoming less popular in terms of whatever that rating, etc., that they have, or the election polls that they have, markets, the biggest worry was that what if Trump comes? And then when the Trump came, after that for several quarters, US markets did pretty well. If you remember the Brexit before that, in the month of June, it was like, if Brexit happens, market will go down. If Brexit doesn't happen, then market will go up. UK market as well as the US, UK pound sterling. And after the Brexit was like a very, very different scene. So several times these things, like market is generally not very good at two things. Number one, predicting the election result. Markets are not good at that. Number two, after the result is known, how this will impact the economy and markets over the next several years, right? So I think we shouldn't pay too much of attention on that. But of course, you are right that there are many countries that will go through the election. There are many other interesting factors. So markets will be volatile for sure. That much I can predict. And maybe the sentence that I use often these days is if you ask me anything about the world, the only thing I can say with certainty, is continuity of uncertainty. But उसी वजह से पैसा बनता है बाजार में. Because of that uncertainty, people are always hesitating in like investing. But if एक उसका famous quote है, I think Howard Marks का, when the knife stops falling, when the dust settles, when there's clarity on the horizon, I mean, then there won't be any money to be made, right? I mean, कुछ तो uncertainty होगी तभी आपको opportunity मिलेगी.
Thanks, Navneet. Gaurav, over to you back.
No, I think we are done with the questions and we are done with the time too. Navneet, thank you so much for joining us. And in case somebody has any other questions, you can probably write in to us through your relationship manager, and we will try our best to get them answered through Navneet.
Thank you.
Thanks, everybody. Thank you.
Thank you, everyone, for joining in. Have a nice weekend.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.